Hello friends, my name is Pratik Oswal and I head the passive funds team at Motilal Oswal Asset Management Company. So I take care of all the ETFs and index funds that you've been hearing over the last 2 years. And I also thank you for your support so far. So we're launching very interesting, very different fund that we're coming up with. It's called the Motilal Oswal Nifty Momentum ETF and the Motilal Oswal Nifty Momentum Index Fund. So we're launching the same strategy but under two different funds. So one is an index fund, the other one is an ETF. What we've learned is that a lot of investors prefer ETFs over index funds and vice versa. So we are very proud to give both options to all our investors today. So what is the Motilal Oswal Nifty Momentum Index? So what we've seen is that, if you look at the entire passive fund space, a lot of what is popular is extremely simple products like a Nifty or a Sensex or a mid cap or a small cap or even an international fund like S&P and NASDAQ. But there's a new category which we think is going to be very popular, and that's under the category of rules-based investing. Factors are technical term for strategies. And so we believe that a lot of the strategies that help investors pick stocks can invest in factors. So to give you an example, investors who are looking to buy only quality stocks can look at a quality index, quality fund, where you would only, out of the top 200 stocks, the fund would select top 30 or top 50 quality names from a long-term profitability perspective. If investors want to buy a fund where they would only want to buy the high momentum stocks, whereas the stocks which have driven the most performance can do that through a momentum index. A strategy that investors want to only buy into value stocks, which is some of the cheapest stocks out there, can look at a value fund. And a strategy where investors want to buy a low volatility or only stocks which are extremely stable can do that through a low volatility index fund. So these four strategies are extremely popular, and we believe that it really helps investors to build a satellite allocation through these funds in their portfolio. What we've also seen is that over a very long-term perspective, these strategies have actually done better than the underlying index. So a lot of investors who are looking at slightly higher growth in funds, and who are also very looking for low-cost options can do that through factor index funds or factor indices. So we are launching the Motilal Oswal Momentum ETF and Momentum Index Fund. So what is momentum? Momentum is all about the price. Essentially you're looking at the top 200 companies in India, and whichever are the 30 most momentum driven stocks, so the stocks which have given the highest momentum or highest price appreciation will be selected and will be invested in. So very simple, it's all about the price. And what we've seen is that the index has actually delivered about 6 to 8% returns higher than actually the benchmark over a very long time. So it has done a lot better. But yes, the index also comes with relatively high churn and a little bit more volatility than the index. So it's very important for investors to understand the risks behind buying into a momentum index fund. A lot of investors are also asking me if this fund gives alpha. Yes, the whole idea behind factor indices is to get returns that are higher than the benchmark. But investors should remember that this is not always true. Like any other strategy or a managed fund, there are times when these factors also underperform. So investors need to take a very long-term perspective when they're buying these funds for their portfolio. So that's the Motilal Oswal Momentum Index Fund and ETF. Thank you so much, and looking forward to all your support in the fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.